Hello traders and welcome to another video review. Today is Thursday, May 14th, 2026. Let's take a look at the economic calendar for today. So what do we have here for today? Very important data. Some of them had been published, like GDP from the UK, as you can see, in line with expectations, up from 0.2 to 0.6% and up from 1% to 1.1%. Overall situation here with the GDP, different measures. I think it's a monthly, quarterly and yearly GDP, generally better than expected numbers from the UK. Another very important data are scheduled for is at 2:30. Those data are from the USA and they include core retail sales and initial jobless claims together with the retail sales as well. So market participants expect retail sales to go down from 1.9 to 0.7 and 1.7 to 0.5 respectively, and the initial jobless claims to stay mostly at the same level, around 200,000 claims. So kind of a few important data releases still ahead of us. Nevertheless, without any further ado, let's switch to the charts and we start with euro dollar. For our time frame chart of the euro dollar is missing the volatility these days after few attempts to break out above 1.1797, 1.1771. The market went lower towards the technical support at 1.1669, which is the part of the demand zone. Right now, a local low was 1.1696, and the market is trading very steadily, roughly around the middle of the channel. Let me just adjust the channel so we can see what will happen next. So we got this kind of a nice channel here. Let me just make it a little bit wider. As you can see, there is some kind of a channel here. It looks like that was the major movement to the downside. This is like a counter trend movement to the upside, some sort of the counter trend movement to the upside, corrective in nature, and now we might see some other movement to the downside to complete the ABC or WXY or some other corrective cycle, and then the market might be ready to move higher. So the current situation for the US dollar immediate is bearish, but there is perspective for this euro dollar to go higher. The same situation can be observed on the cable after the data market because the data were in line with the expectations, so no surprise here. Market is at the same level, virtually at the same level, roughly trading roughly around 1.3520. Local low was made at 1.3483, and in case of a breakout below this level, we might penetrate the levels around the low of the wave 4, which is 1.3450. Free momentum is already negative 42 points only. So again, bearish pressure around this levels of 1.3650 made the market to move a little bit lower, and the market is still under the bearish pressure. US dollar versus the Japanese yen keeps trading inside of this rising channel. Just recently we broke towards the level of 1.50, 1.57, 58, 1.58, I guess 1.58 exactly, 158, sorry, 158. So we broke above 157.94, so it's 6 pips movement to the upside, but you can see volatility is very low. It's getting lower. Higher we go, lower the volatility. You can see it here. Straight on, look at this candle, pin bar, look at this candle, right? And the momentum is still positive, still strong for 67 points, 3 points away from the extremely overbought conditions. So right now is to be or not to be for the US dollar versus the Japanese yen market. Either we'll have a breakout higher, definitely strong breakout higher, or a reversal and we're out of the channel below 157.39. Decision time. Gold doesn't do much. It looks like the wave 2 correction is still in progress. We are still waiting for the wave 3 to the upside to be developed. For now, there is no such a indication here as we hit the level of 50 on the momentum. So as you can see, momentum is dropping lower, volatility is lower. Now is the decision time. We either break above this. Let me just place this rectangles yet again so we know that we stay on the same page, right? So there is a supply zone obviously from the top side. So the supply zone is obviously from the high of the wave 1 to this very, very narrow zone. Nevertheless, it's still some sort of the supply zone, and that's the top border for the range. And from the bottom we got, let's say, this kind of a range here. Right, so we got the movement to the upside, movement to the downside, basically ready here. There you go, maybe something like this. There you go. So we are waiting for the breakout, either to the downside or either to the upside or to the downside. To the upside is preferred because in the background we might have impulsive wave 1 already done. S&P 500 and the news, boring market, keeps going up and it's 40 points away from the 7,500 level, which is the target level, psychological level. That might be the target for the S&P 500 bulls. Momentum wise, we keep making the momentum lower. The divergence is getting bigger, so please be prepared for a potential correction on the S&P 500, because according to this technical situation here, we might see some sort of the reversal correction on the S&P. But for now, we are not quite sure when this will happen. For what we can say for now is that the current situation in terms of the price range, for example, right, we got this price range, and this price range is minus 1.34 correction. The other correction was minus 1.23. The other correction was this one might be smaller. 1.38. Whoa, the biggest, shortest, but the biggest. And let's say this one here, 1.18. So if we go down more than 1.40%, we might say, okay, we got the overbalance of price and time, and that might be the first indication correction is in place, right? So please keep an eye on this situation, S&P 500. Crude oil tested the level of 103.65 and reversed back inside of the consolidation. Nevertheless, it's still not the end of the up move, because you can see the dips are being bought back up around the level of 99, and the momentum is still quite positive, not maybe strong, but quite positive, 54 points. So we are stuck in between those two lines. We are above the blue trend line. We will see what will happen next. A geopolitical situation will have a major impact on the next leg on the crude oil. And last but not least, the Bitcoin. For now, bears are winning. As I said, as we've been speaking about it for quite some time right now, this is the supply zone. Let me just move it if I can. There you go. This is the supply zone. Very important technical resistance, very important technical resistance level. Every time bulls are trying to break above the technical resistance and break higher above the supply zone, bears will be more active. They will try to push the market lower, try to push the market lower, try to push the market lower. For now, they push it towards 78,754. Immediate movement to the upside. We broke below the level of 50, local low 35 points, 36 points. So we might see another push to the downside as the momentum weakens, and then the market will be ready from the technical point of view to continue the upward movement, and for yet another attempt to break above the supply zone. If there is no breakout and movement, strong impulsive movement to the upside, the market might reverse even lower. The next target might be located roughly around 76,000, or even the swing low, the last low before the new swing high, 74,937. For now, it's time to see what is going on. But there is something interesting at the end I would like to point out here. There is, let me just take my earlier wave, there you go, corrective pattern from this high as the top of this movement to the upside, right? This movement to the upside, this blue one, right? So we got the wave A, we got counter trend wave B, and we possibly might even have wave C. Look at this, 3 waves down, perfect, 3 waves down, perfect correction. Maybe impulsive movement to the upside here, looks like impulsive movement. looks like the market might be ready to yet again attempt to break above the supply zone. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.